Welcome back. You're watching Trading Calls live on ET Now. Let's connect with Ajay Bodke, Head Investment and Strategist and Advisory with Prabhudas Lilladher. Ajay, morning. Thank you for joining us. After a 5% run up from the recent low, do you think markets are in for consolidation or correction?
I would say that the markets should correct, should sort of move sideways for some time, because we've seen a very strong rally of around 9% from mid of April till now, and I think the positives sort of in terms of sharp fall in crude oil prices alleviating the concerns of current account deficit, the market has sort of more or less discounted that. At the same time, I think we are in the midst of result seasons, and we got to see how the result season pans out. I think till now 46 companies under our coverage have announced results, and although on the bottom line front there is a clear beat that the companies have shown, so vis-a-vis something like 12% growth in bottom line, those 46 companies have shown 17% growth in bottom line, but on the top line front they have really caved in, and the top line growth has actually come in at nearly 50% lower, at around 5.3% vis-a-vis 10% that one has seen. So I think one will have to wait and see how the results pans out, and at the same time the political uncertainty continues to dog us, and we'll have to wait and see how sort of things move on that front.
Ajay, let's talk numbers here. Now, if I look at key numbers which came out yesterday, Union Bank and Punjab National Bank have come out with excellent set of numbers. Bond yields have corrected. The differential between PSU bank and private bank is an historic high. So is it safe to assume that in the near term we could be staring at a tactical move in some of the good quality PSU banks, at least the ones which have come out with good set of numbers?
I think I would still wait for a quarter or so, because as you said that the two names that you mentioned have come out with numbers that have beaten analyst expectations. At the same time, let's not forget that banks like IOB or Dena Bank and a few other public sector banks have disappointed the street, and the numbers that were trotted out by them have been far below analyst expectations. And the main reason there has been not only has there been disappointment in NIMs, but also on the sort of the problem asset front. So I would be slightly worried even today of plunging headlong into public sector banks. I'll keep a close watch on them. I'll still sort of weigh in some of the private sector banks and NBFCs, which have trotted out excellent results. In fact, if you look at the numbers for the BFSI as a whole that have come in now, it's one sector that has beaten expectations of the market. And just sort of to give some numbers, vis-a-vis 16% growth expected in top line, I think 24% growth has come in for BFSI companies till now, and vis-a-vis 15% bottom line growth, 25% growth has come. So I would still be market weight or slightly overweight on banking sector as a whole, banking and financial sector. But I will weigh my sort of bets with some of the private sector banks like ICICI Bank, Axis Bank, and in the smaller category companies like Jammu and Kashmir Bank.
Right. Just stay on, Ajay, for a second. Maruti CFO saying watching yen's trend very closely. They think that the yen should stabilize at these levels. However, in the interim, many believe that the yen could weaken further from here, as that's the intent really for the Japanese government, to weaken the yen, to boost exports and to bring about more foreign flows into the economy. The yen dollar is at 100, close to actually 101 out there. Ajay, come in on the view on autos right now, the cyclicals of century, industrial stocks. What's the call there? I mean, do you think the recovery is perhaps in place there?
I think on the autos we are basically recommending, continuing to recommend Maruti Suzuki with roughly 24-25% total import content, and the sharp more than 30% plunge that one has seen in yen. I think the auto analysts believe for last couple of months that Maruti would be the biggest beneficiary of the same. At the same time, the company had a lot of labor troubles last year, in the middle of last year, and I think we clearly appear to be over the hump there. So I think also the petrol diesel differential has narrowed down significantly, and the large part of portfolio of Maruti being petrol focused, I think both on the fundamental side as well as on the currency side, I think there are tremendous tailwinds that the companies have. And hence I think 1860 is the price that we are looking at on a 1 year basis for Maruti. So we would sort of continue to look at Maruti as well as Tata Motors with an improvement in environment in the main markets for Tata Motors, namely United States as well as China, especially at the luxury end. I think that's one stock that we're looking at, and 340 rupees is the target price that we have for Tata Motors on a 1 year basis. So I would still be slightly worried about the two-wheelers because the volume growth continues to be tepid out there. Competitive environment is extremely strong. Honda continues to gain market share at the cost of both the incumbents. So I would still advocate Maruti Suzuki and Tata Motors as the preferred plays in the auto sector.
Right, Ajay, stay with us. Let's take a quick break. When we come back, we'll get you trading ideas from Sandeep Paul.